Now we should better talk to our friends in Vietnam. A good evening, I think. Is that right?
Hi, good afternoon from Ho Chi Minh City here. Hi, Richard, and hi, James. Thanks for having us on the program today.
Thank you. And so I think, as usual, we'll just start with asking you to sort of run a bit through what the fund's trying to do, please, and how you're going about it.
Yeah, thanks for having us on the show. So maybe a bit of a background to VinaCapital and the Vietnam story. We're about 10,000 kilometers away from London at the moment, but our fund is listed in London on the London Stock Exchange today. So the UK and UK investors are very important to us. The VinaCapital, we started 20 years ago with about 10 million under management. Today, we have just shy of $4 billion US dollars under management. We've got about 200 investment professionals across several strategies, from public equities, fixed income, private equity, venture capital, and all the way over to real estate and renewable energy. But the fund that we're talking about today, the VinaCapital Vietnam Opportunity Fund, is that the London listed fund that Andy, who's here with me today, and myself, Khan, we help run. And in terms of the firm, we've been doing this, as I said, for 20 years, and I guess over the years we've been able to form some really strong partnerships with global and international investors. Vietnam has been and remains a very interesting space, but access is difficult. As I said earlier, we're far away. But I think for global institutional investors, it's important to find a trusted partner, and I think that's the same with retail and investors, as well as folks that listen and subscribe to your show. It's important that they understand who is their manager in the country. And I think one of the testaments to our strength is that we partner with very strong global international investors. So, for example, in real estate, we've got partnerships with Warburg Pincus and CV Star. On the energy, we've got EDF Renewables. Logistics, we've just formed a new partnership with AP Moller Capital, which is part of the Maersk shipping company, and that's a focus on logistics, something that you were talking about a little earlier, Richard, around warehousing and whatnot. This is some really interesting investment opportunities here in Vietnam. And then on the venture side, we've had long-standing partnerships with Draper Fisher out of San Francisco, and more recently with several venture investors here in Southeast Asia. So, I thought maybe we could sort of touch on this ESG lens, and I think one of the questions we normally get asked by investors, we are in a frontier market, and we're very aware of that. ESG, governance risk, environmental risks are things that have been part of our consideration and part of our investment process over the years, over many years. And as private equity investors, we actually really do get into the businesses that we invest in. We bring in external ESG consultants to help us with the due diligence. And once we invest, we look to create changes, and through those changes, you create value. We have today, are members of the UNPRI. We subscribe to the performance standards of the IFC. We support the climate change through the Task Force on Climate Change. And I think what's important is that these processes and this due diligence has been part of our investment process for some time now. It's not sort of a new catchphrase that suddenly has caught on. By investing here in Vietnam, in the frontier market, we really do have to do this level of due diligence. I think just to before we get into a discussion around the Vietnam story and why it's such an interesting opportunity, within the firm itself, we've been doing this for 20 years, and a few years into this, we decided to put the money that the firm makes, the partners make, into the foundation. And today, we are probably one of the largest foundations here in Vietnam. We do, our foundation team does some tremendous and amazing work around giving back to the economy, giving back to the society, around education, around healthcare. We really encourage, as we talk about the investment opportunities, I think we sometimes forget some of the impact that the firm we make on the community side. So on our website, please have a look at that. Looking at Vietnam, I think it's important to understand that we are a country that is very dynamic, and if you've had a chance to visit Vietnam in recent years, you can attest to, it's a very busy, it's a very exciting place. There's lots of motorcycles around. There's lots of people. We're a country of 100 million people. And if you think about that 100 million people, 65% of that population, the equivalent population of the United Kingdom, I guess, is under 35 years of age. So we're a very young, productive, hardworking society. And it's because of that, we're seeing very strong interest in foreign direct investments. Companies from within the region and globally coming to Vietnam, setting up manufacturing. We have a very productive workforce. And then as a function of that, you see that the rising middle income. That's a really interesting phenomena. We are, I believe, one of the fastest countries in history to grow out of poverty to middle income. And that has meant that there is a really interesting dynamic around consumption. And later on in this presentation, we'll talk a bit about the consumption boom. And I think importantly, what are the investment opportunities that this fund and we as managers are finding there. And I think equally important is that the government has a really strong commitment to public spending. Infrastructure development is high on the priority, and that's important because if you're a Foxconn or an Apple or a Lego or an Intel, who are all companies that have set up operations here in Vietnam, when you come here, you want to make sure that you've got a good, educated, productive workforce, but also good infrastructure so that you can bring your parts in and the movement of goods are there. I'm going to briefly pause there, James. Is there any questions you wanted to touch on before we sort of delve into the macro story?
The first questions that are popping up here, one of them is just talking about which sectors you think are the best places to invest at the moment, given what's happening in Vietnam.
Hi, James. This is Andy. Yeah. So what we do every 6 months or so is we look at the potential return on each of the sectors that Bloomberg picks out. I think it's called GICS sector list. And then what we do is we look at the potential return, what we call EPS growth for the next 3 years. And we couple that with the risk that we see associated with each of these sectors. From that analysis, we review it every 6 months. We would construct our portfolio in terms of getting a diversified exposure to these sectors. And as you can imagine, the sector that demonstrates the highest risk-adjusted return gets more weight. At the moment, we have a lot of emphasis on real estate. It is a sector that primarily contributes to the millionaires and billionaires you see out of Asia. If you look at Singapore, Hong Kong, and now Vietnam, you see that a lot of millionaires are made out of real estate development and real estate investments. And coupled tightly with real estate is the financial sector, and more specifically, the banking sector. The commercial banking sector is highly correlated with the performance of real estate. And as economies grow, in this case in Vietnam, we're growing about 5 to 7% per annum. Financials would do very, very well. In addition, as Vietnam, as Khanh mentioned earlier, we're spending a lot more money on infrastructure development, and that's going to mean materials, construction materials like steel and cement. That sector is actually quite interesting as well. And as some of you may know, we recently tied up or partnered up with AP Moller to focus on logistics investments in Vietnam, from seaports to warehouses, bonded warehouse, wet warehouse, dry warehouse, and trucking movements of goods domestically across Vietnam. So this space is very hot right now. I think it'll be very strong over the next 3 to 5 years, because Vietnam is becoming more and more a manufacturing hub as multinationals diversify themselves away from China to produce more and more goods in Vietnam. Folks like Legos, who's building $1 billion carbon neutral plant in Vietnam. Intel produces a lot of their chips in Vietnam. Samsung produces more than 50% of their smartphones in Vietnam now. And all these businesses will need the logistics sector to support the movements of their goods in and around the country and out and exporting these goods. So I hope that gives you a sense of the sectors that we're interested in. But I think in general, it is really the sectors that contribute to the growth of the domestic economy that gets us excited about investing in Vietnam.
Okay. One of the things, the stories that's been running for a while now, is this idea that people are shifting manufacturing out of China and into places like Vietnam. How much of Vietnam's success is down to that?
Yeah, I think you can say that over the last 5 years or so, a big chunk of the gross domestic GDP of Vietnam has been a function of FDI coming to Vietnam, setting up shop, and then producing the goods for export. And so I think it's one of the 3 key pillars now of the economic development of Vietnam. The other pillars are agriculture and services. So manufacturing export is becoming a big component of GDP growth in Vietnam.
And if I could add, James, what's important is that the manufacturing that is maybe coming out of China, or the choice of Vietnam as a manufacturing base, what's important is that they are highly technical. They're becoming increasingly sophisticated manufacturing plants, right? There was a time we were producing, socks and undergarments, sneakers, and they still are a component of export, manufacturing and export. But increasingly, and today, what dominates manufacturing here is the electronics. Samsung, for example, over 50% of their smartphones are made here in Vietnam. Apple, aside from making their AirPods and headphones, are now going to be making the iPads, the MacBooks, and importantly, the Apple Watches, which, if you think about it, is a really complicated and intense manufacturing requirement, because it's such a small form. So, what you're seeing is that the manufacturing that is coming here is of very high quality and very high technical standards.
Does it matter, or are you affected by the sort of tension between the US and China and some of the trade war stuff that's been going on?
We're definitely impacted, and I would like to say that we've been impacted on a more positive side. There are a lot of multinationals are looking to diversify their manufacturing away from Vietnam. And recently, I talked to a lot of my counterparts in the US and Europe in terms of investing flow. There seems to be more emphasis to invest in Asia, but more outside of China, into places like South Korea, Japan, Taiwan, and Southeast Asia. There's a sense of, I hate to say it, but an avoidance to deploy additional capital into China. And I think Vietnam benefits from that. I don't think, to be honest, I don't think it's going to be a long-term sort of movement. I think it's a short-term, but moving a little bit of money out of China is a lot of money for a smaller nation like Vietnam. After all, we are less than 1/10 the size of China. And so if you just give you an example, if you move roughly 5% of manufacturing out of China, it represents 100% growth in terms of manufacturing capability in Vietnam. So in short, the conflict or the trade war, if you will, is benefiting Vietnam.
In the real estate sector, how much of the sort of growth in that is driven by foreign money, or is that like a domestic thing?
Yeah, it's interesting. The real estate sector is driven by, first and foremost, demand. Demand is coming from the domestic side in terms of residential, followed by a lot of manufacturing real estate properties, followed by commercial. The demand then drives the need to make the investments. And then the question is, where does the capital come from? Primarily right now, it's coming from domestic commercial banks. Foreign funds, foreign capital do participate in the development of buildings and residential. But I have to say it's funded predominantly by domestic capital, whether they're domestic banks or investors. Foreigners do participate, but in a much lower scale than domestic investors.
Yeah, and I think to add to that, James, the Vietnam urbanization rate is less than 40%, right? If you look at a market like China, that's over 65%. So there's still a significant gap, and for urbanization. What we were traditionally an agricultural society, now we're becoming a manufacturing society. That means that there is a significant level of movement of people from the countryside into the cities and the surrounding areas, and that creates a tremendous demand for real estate. And if you think about what is being supplied versus what the demand is, our chief economist believes its demand is almost double that of what is being supplied. So there is still a very strong domestic demand for real estate. And likewise, that urbanization creates a demand for other things like education, healthcare. And these are also sectors that we're very much interested in. And actually, if you look into this chart here that you show, you pulled up, James, there are many sectors that are in our portfolio that are not represented in the public markets, right? Things like healthcare, information technology. There aren't that many, if at all, investable opportunities on the public markets. But our strategy allows us to look at private opportunities pre-IPO, and allows us to, I guess, take overweights, if you will, to certain sectors where we believe there's going to be growth. Coming back to the comment Andy made earlier, sectors that will benefit from the domestic economy and the increase in consumption in the domestic economy.
Within the real estate chunk there, how much of that is residential and how much of it is commercial stuff?
Yeah, we don't have the exact number, but I would say about 60 to 70%. If you compare it with commercial, 60 to 70% is related to residential demand. The commercial demand is primarily in the urban city centers, whereas the residential demand can sprawl out easily into suburban area. And it's also a function of the high-speed rail that's being developed today. As more stations are developed in the outer skirts of the city, the residential development demand is much, much higher than that.
We've seen kind of boom and bust in various markets, including Vietnam, in terms of real estate. Is that something you expect to continue?
Yes, like Ken said, the demand outstrips the supply of real estate, particularly on the residential side, quite significantly. I think it'll continue. The challenge we have at the moment is obviously the cost of funding in Vietnam, as well as around the world, is high. It's gone up quite a bit, and it's making it harder for real estate developers to make generous profits, and it's slowing down the process. I think when the cost of funding and interest rates come down again, we will see developers come back and obviously develop more residential units. It also allows the end buyers, the end users, to borrow more easily at a lower interest rate. So right now, our challenge is liquidity and interest rates, and liquidity is tight and interest rates high. which has slowed down the real estate market quite a bit.
Okay, thank you. So again, in terms of this sort of little pie chart here, can you explain why you have sort of private equity in the portfolio and what the concept of this public equity in private terms, the PEP thing is? Can you explain exactly how that works, please?
Yeah, happy to do that. I think you can look at VOF as similar to the like a Berkshire Hathaway in the United States. It's a listed asset. Anyone can buy shares, 1 share or 1 million shares, and get exposure to Vietnam. What we do with this capital is we focus primarily on what we call private equity types of investments. And private equity can be in investing in private companies before they go public, or it could also be private investments into companies that are already public. And then what we do is on the private side, for example, we make the investments, we'll deploy 30, 40, $50 million into these businesses. But the reason it's private equity is because we get to do due diligence. We get to do financial, legal, and ESG due diligence. We get to negotiate downside protections, and we get to participate at the managerial or the board level and help these businesses grow. This is extremely important in a place like Vietnam, a frontier/emerging market, because if you're not able to see under the hood, things can happen, scandals can happen. And as a result of that, you need to be able to do due diligence because you aren't going to be able to sell these assets. They're not liquid assets. We do get into illiquid positions, and we do hope to take them public. And that's what's happened in the pie chart here. We've taken a lot of companies public over the years, and we hold on to them as public investments. That's what you see on the red side. The 70% of our NAV is public equity, but more than 90% of those assets were entered when they were private. And then when you have this group called PEPT, it's really private investments into these public entities. And so what it means is that these companies were already listed, but we were able to negotiate a large investment amount into these companies and have private equity terms. And so, as you can see, our modus operandi is to negotiate large positions, meaningful stakes into these businesses. And in doing so, we look forward to the right to have due diligence, minority protection, and participating at the managerial level with these businesses. And the reason we do that is because we view these businesses, even though they're listed, as being somewhat illiquid. And as a result, the downside protection allows us to exit easier in the future. The ease of exit can be in the form of a drag along. We can partner with other sponsors or other shareholders of the company and what we call a drag along rights. So that means we drag other shareholders to sell 51% or 65% to a strategic buyer, which that means we're able to command a premium for a controlling stake. Or other types of downside protection we ask for is a put option back to the sponsor in case the business is not performing as committed. So these are very important in a place like Vietnam, and that's sort of the modus operandi on our strategy when it comes to investing. We really don't pick stocks in the market. There's plenty of funds out there that gives people exposure to the public equity. It can mostly in the form of ETF. That's the most inexpensive way to access Vietnam's listed equity. But again, you are at the mercy of the liquidity of these assets in the market, and you don't have any sort of rights when it comes to investing singular shares or accumulation of shares on the stock market.
Okay, so let's have a closer look at the portfolio. As we've seen the asset split before. Here's the top 10 investments, the listed and unlisted stuff. Was one question here about the degree of concentration. Is this a normal thing, or do you let positions run up if you like them?
It is somewhat normal. So this is my favorite slide, actually. It gives me a chance to talk about all the great companies we have in our portfolio. As you can see, the company with the high exposure is ACB. And the fact that it's gone up to almost 14% of NAV is a good thing. We invested when it was much smaller, and the valuations have gone up. We have taken profit. We slowly take profits in ACB, and fortunately, it's a very well-run bank. It's fairly liquid, so we can sell the shares in the market. KDH is another great company we invested many, many years ago. We actually invested about $30 million in this business a long, long time ago. Had we not sold any shares in this investment, that $103 million would have been like $400 million. So you can see that although it's taken up 10% of NAV, we have taken profit over the years and have trimmed it down and reinvested the proceeds in companies on the right side. These are companies that have not yet gone public.
So are there actually any limits on how big a position can get to?
Typically, we do seek board approval if we go above 7.5% upon entry. We've not had to do that in the past because typically we deploy between $30 to $50 million. We have in the past taken companies up to about 20% of NAV, and it's again a very fortunate thing. We invested in a milk company when it was about $450 million in value, and because of the fight between shareholders, I think it's Jardines fighting against FNN for shares in this business, it drove the valuation up to $12 billion. It hit the 20% quite rapidly, and we took full advantage of that, and we sold the shares to these shareholders.
Right, okay. There's a specific question here about how fat, so hard fat, is it?
Yes, number 3.
Yeah. So this is a steel company, isn't it? Just to be sure. And then it's asking basically, has construction growth been able to offset the extreme volatility in steel prices? Does that make sense?
Yeah, well, Huafat is a company. It's the history of Huafat. We invested many years ago in 2008 at about $450 million in value. At the time, we turned the company from a steel company that was importing scrap metal into a company that was doing steel from fully integrated complex, which meant that they were producing steel from coke and iron. They were number 11th in the market back then. They soon became number 1. In 2021, they delivered $1.5 billion of profit after tax. As we went into COVID, the slowdown in construction in China, in Vietnam, significantly impacted their profit. But that's okay. The long-term potential for this company is that the infrastructure and residential and real estate development will continue in Vietnam. And so we continue to be very bullish on this company. And further to that, recently we've seen a lot of the finished goods in this company being exported to places like China. And the reason is they've been able to continue to produce finished goods while steel companies in China weren't able to do so. And so now that they're being able to export not only China, but also neighboring countries in Vietnam. So in the medium to longer term, we feel very strongly that this company will continue to do well, especially as Vietnam builds out its infrastructure in more residential and office buildings.
Have there been any big changes to the portfolio in the last 6 months or so?
Well, we do, I have to admit, we do run it's like running a large cruise ship. You really can't turn and change it too rapidly. Our turnover on a complete basis, in other words, we completely exit the company, it's usually 2 to 4 a year, and we bring on 2 to 4 new investments a year. We typically, we average about 4 M&A transaction, if you will, per year, 1 per quarter. And so that's not a whole lot. Our holdings are roughly around 30 companies. And we're right now in the midst of exiting 3 strategic holdings, or 3 holdings complete exit. Late last year, we exited the largest PET bottling business to Indorama, which is the world's largest PET bottling company. And so, in short, the turnover of the portfolio it's not a whole lot, but we do turn over complete positions to strategic buyers. That's our preferred path of exit.
Can you tell us a little bit about some of these private equity positions now? So I see a couple of medical companies in there. Are they hospitals or something else?
I'm sorry, what was the last question?
Are they hospitals or are they something else in the medical sector?
Yeah, both of them are hospital platforms. One of the things that we don't do is we don't invest in what we call body shops. And a single hospital is considered a body shop because often case the 1 or 2 doctors, their individual brand outshines that of the hospital. And so we are held hostage to these individuals. So we don't do that. What we do invest is hospital platforms. And these are platforms that have 4, 5, 6 hospitals. And the number 1 and number 3 on this list are hospital platforms. Tâm Chi is in the southern part of Vietnam, and Thu Cuc is in the northern part of Vietnam. And we continue to build this hospital platform out. The people are getting wealthier, they are getting older, and they're spending a lot more money on medical services, from having babies to curing to addressing cancer. And now I'm seeing a lot of cases where people want to spend money on beautification, stem cell, plastic surgery, cosmetic surgery. So it's becoming a very hot area for the wealthier side of society at the moment.
Yeah, I mean, James, if you think about healthcare and, as people have disposable income, they tend to spend on incrementally better healthcare. And the thing in Vietnam here is that, yes, you do have a safety net, you do have public healthcare. It's very good, but as you become increasingly wealthier, that incremental cost of going to a public healthcare, a public hospital versus a private hospital is not much more different, and that's really what we're targeting here, right? We today are probably one of the largest private equity investors into hospitals and healthcare in the country. Those two platforms that Andy mentioned, the Damji Medical and the Tulkuk Medical, have about 8 hospitals and mega clinics within that. So they are providing healthcare services to a rising middle income class. In addition to that, folks like the medical clinics that Tulkuk are rolling out, they're providing medical services to the industrial parks and to the factories. So, for example, like Samsung, they have 250,000 people in the factories up in the north. Many of the senior managers and executives, they're the kind of people that Tulkuk are targeting to provide healthcare services.
Yeah, it's interesting stuff. I mean, what else have you got in that private equity portfolio? So a lot of these names don't really maybe give you a clue what they're doing, but is there anything quite exciting in there?
So number 10 is quite interesting. And number 10 is the jet fuel company. It's the second largest jet fuel company in Vietnam. The first one's owned by Vietnam Airlines, which is a national airline. This is interesting because we have an opportunity to invest in airlines. We said, well, we're not really particularly excited about airlines, but as a proxy for the travel of domestic and international travel, we thought it'd be great to get a stake, a meaningful stake in the jet fuel business. And as the travel recommenced after we got out of COVID, this company's revenue and profit have grown 3-4 folds over the last 12 to 18 months. We'd like to take this company public in the next few years. Number 5 is the largest laminate wood producer in Southeast Asia, for that matter. They deliver about $25 million of profit per annum. What they do is, your cabinets in the kitchen, in the living room, they provide those panels. They're not pure wood, but they are laminates, and they do high-tech laminates. The technology comes from Germany. It can be exposed to the sun, the wind, the sea, what have you, and it lasts quite a long time. And it's a core component of the residential development in Vietnam. And they export a tremendous amount of the stuff to India, as well as the United States for residential homes, etc.
If I could add, the other one that's really interesting in this is number 8. It's called Twins in Holdings, and they're the largest convention center and hospitality group in the south of Vietnam here. And what's interesting about them, it's called Twins because it's actually run by 2 brothers who are twins, and they've been doing this for a long time. They have a really good brand name. Many of the people that we know, they were married in the convention centers or the wedding banquet halls that these brothers used to run, and they still do today. And we had an opportunity to invest into them to help them grow this business and expand. And if you sort of think about what we said earlier, that very young population, 65% under 35 years of age, there's a lot of people getting married, right? And so wedding banquets really popular. Equally, as more and more corporates and companies become more institutionalized, hold, for example, AGMs and corporate meetings, as that the meetings and convention business becomes more international. Many more companies and events folks in the region are looking to Vietnam to come to Vietnam. They're providing a really top quality product for that. And for us, it's a really interesting and exciting and growing space. Yeah, and it plays into this consumer theme, right?
Yeah, exactly. Good. That's great. Interesting stuff.
Yeah.
I think we should probably mention your fee cut, since that's here is a slide. Very generous of you. Was the board keen to get the rate down?
Well, I think where the position that we understand that we take is that, look, we do run a very active strategy. We are here in the frontier, but we're also cognizant that overall fee levels across the industry, investment companies, is trending down. So, we have for many years had a fee structure which we think is best of breed and best of class. It has a management fee structure that tiers down as the AUM increases. It has a performance fee that is only earned if we achieve certain targets and achieve the hurdles. But importantly, two additional elements come into play. One is that there's a cap on the fees the performance fees that we are paid on any given year. And that's about 1.5% of NAV. So that's the maximum that we're paid. And in addition to that, there is a callback mechanism. So in subsequent years, we're not earning that out if we're not delivering on performance. So those elements of the fee structure remain. And I think that's really the core and the differentiator of this fee structure we have. What we've done this year, and coming into effect 1 July, is just reduce the top line. So the management fee now is 1.3% for the first billion. The incentive fee now has dropped to 10%, and the hurdles increased to 10%.
Yeah, good. All good stuff.
Yeah.
Well, thank you for this. I mean, before we sort of finish up, do you want to sort of say what you think the coming year holds for Vietnam?
Yeah, again, really appreciate you allowing us to introduce ourselves and our fund on your platform. I think we do face quite a bit of volatility from now until year end. At the moment, everyone around the world is trying to figure out what this debt ceiling negotiations going on in the US and how it impacts places like Vietnam. But I think we do take a view to investing for the medium to longer term. And we do think that it's still a very attractive story in Vietnam. Economy is growing 5 to 7% per annum. And people are getting wealthier and wealthier, and they're going to spend money on basics, goods and services in Vietnam. And the foundation of Vietnam's economy is manufacturing for exports. And so logistics and these various sectors that help the export side will benefit tremendously. And so I think it's a great opportunity for investors around the world to participate in the growth story. And we've seen this growth story before. We saw it in South Korea. We saw it in Taiwan. We saw it in Singapore. And now, Vietnam is about 20, 30 years behind these countries and following the same sort of economic growth path. And I think it's a great opportunity for investors around the world to participate on this growth story because I think it's a replay of some of these Asian tiger economies that we saw over the last 20 to 30 years.
Great. Thank you very much. And good luck with it all. And we'll follow with interest and maybe get you back on in a year or so and see how it's gone.
Look forward to it. Thank you.
Thanks, James.
Good. Well, thank you everybody for tuning in today. We've got a whole load of things lined up now. So we've got a full slate, I think, all the way through towards the end of August, but it won't all fit on the slide. So next week, we'll be talking to the manager of Baillie Gifford UK Growth in the Combi. And we'll obviously have Andrew Mahati back talking about what happened over May. I think that's going to be interesting, Baillie Gifford, because obviously it got derated quite aggressively when interest rates started to rise. But it does seem to be perking up now, and it's going to be interesting to find out why. So that's next week. And then, as I say, we've got more things lined up. So thank you for tuning in this week, and we shall have a good time this weekend, and we'll see you next week. Bye.